I thought Dan Lomas was very informative.
Yeah, I love bringing on guests, and I think, we've talked about this before, that it just brings such a great value to our show, bringing a different perspective. And you know what? Every time we bring a guest on, I learn something.
Yeah.
And, I'm interested, and I think when we're doing things like Financial Literacy Month, it's all about education. And I think bringing in some different perspective is awesome.
Absolutely. All right, listen, you can give us a call if you'd like to talk to Clinton about mortgage-related questions. Lots of concerns out there about interest rates, about variables, about renewals, whatever it might be. 902-405-6000. So let's talk to Mike. Hello, Mike.
How you doing, Todd?
Well, you?
I'm not too bad. Hi, Clinton.
How you doing?
Good. The question is, I'm not sure if this one relates to mortgages, but land migration. I have a question on that.
Sure, you can hit me, and I'll see if I can answer it or not. If not, I'll take the question away and get back to you.
Yeah, okay. I had it done years ago. I don't remember exactly when it was. The question, I guess, is: do you every time, or just the one time you have to do it, or do you have to do it every time you move, or how does it work, or what can you send me on information on stuff like that?
Yeah, for sure. So that's actually a pretty straightforward one. Migration started in Nova Scotia sometime around the year 2000. And once the property is migrated, it's on the new land title system. So once it's migrated once, you're good to go. That property never needs to be migrated again. So hopefully that answers your question.
Yes, it does. I probably asked that question when I had it done, and I don't remember the answer. But yeah, good. That's what I was asking.
It's a question that I've had before, because I think sometimes people think every time you do a transaction, you need to migrate it. But once it's on the new system, you're good to go. Never needs to be migrated again. And you actually have to do a migration if you're going to register a new mortgage, or if you're going to sell the property. So oftentimes that happens, especially for people that have owned their home for, more than, 25 years. It might still be on the old system, especially if they haven't registered a new mortgage or if they haven't sold the property. So there's very few properties in Nova Scotia that still need to be migrated. When I first started doing this 17 years ago, we were doing migrations all the time. And we're actually going to be bringing on a guest here at the end of the month from First Canadian Title, and we'll talk a little bit more about migrations on the 30th. So we'll have her on, and she can answer some more technical questions as well.
Yeah, but did you say once you sell, you have to do it again? Is that what you said?
No, if it's on the old system and you're going to sell the property, it needs to be migrated before you sell it.
On the old system, okay. How old are you talking about there?
So, like prior to the year 2000, they would have been on the old system. But if it's been migrated, you're good to go. You can mortgage it or you can sell it, and nothing needs to happen. And that's really something that the lawyer would look into before you do a transaction. I can see myself, because I have access to the land title system. I can see if it's been migrated or not. And I can tell you there's very few properties that we're doing transactions on here that need a migration. I see maybe only a handful a year right now. But 17 years ago, we saw a lot, just because it was very early days on the new system. So.
Yeah, so any chance, do you happen to know how much it costs these days?
Well, it depends. I think if you do it through a lawyer, sometimes that can be more costly. If you're going to do it alongside doing a mortgage transaction, sometimes we can do that as like a bundled deal with the registration of the new mortgage. So it just depends on the type of transaction that you're doing. I would venture to say with a lawyer, you'd be somewhere around like $1,000 to $2,000, just depending on what the complexity is. But certainly, I think if you're going to go do the migration as a one-off, you'd want to go speak to a lawyer that really specializes in land titles and get a price from them.
Right on. Okay, thanks, man.
Thanks for calling.
Take care. If you've got a mortgage-related question just like that one, give us a call, 902-405-6000. I can assure you there's nobody in the business that knows the business like Clinton Wilkins. So if you've got a renewal coming up, or you're not quite sure what to do, if you want to give a 5-year fixed or a variable, or all of these questions that a lot of people have, now's a good opportunity to get some advice from Clinton. 902-405-6000. Rafe, hello.
Yeah, I just had a question about. I'm retired. I own my own home. I'm on pension. I'd like to ask a question about reverse mortgages, how they work, how it works, and whether it's a smart investment, like not investment, but
A smart product, I guess.
yeah, like as part of a retirement. I mean, I have money in our RSPs, and so I'm fairly comfortable. But like, I want to put heat pumps in here, and it's like $20,000. I don't have $20,000 lying around. Now I could go to the bank and borrow $20,000.
So there's two.
Does it make sense to do that?
Yeah, there's two schools of thought. I think reverse mortgages are right for a lot of retired people, and the way that a reverse mortgage works, it's your age is really the biggest factor of how much you can borrow. Obviously, the older you are, the more you can borrow. And the way the reverse mortgages work typically is there's no payment. The payment basically capitalizes every month, and there is, a clause within the mortgage that you can stay in the home for as long as you're living. If you were to leave the home and go to like a senior's home, or if you were to pass away, at that point, then that mortgage would need to be paid out either by the estate or that home would need to be sold. The reverse mortgages, I really think, are right for people, retirees and seniors that have very low incomes, because those people can't afford to take a mortgage and they can't really afford to take a home equity line of credit. But I do see people that are retired that, maybe could handle an interest-only payment. And sometimes in those cases, we will do a home equity line of credit. We can always finance that home equity line up to 65% of that home value, contingent on that retiree's income. And, different people have, different situations. So I think it's going to be a one-off for your situation specifically. And maybe a reverse mortgage is right for you. But maybe more of a home equity line of credit would be right. So I certainly would recommend you seeking the advice of an unbiased mortgage professional about your situation specifically.
Okay. I do have an advisor, like at the bank and CIBC, and he, Wood Gundy, they do my investments and such. But so there's no actual interest on the loan?
There is interest, but that's capitalized every month. So basically, whatever you borrow every month that goes by, it would be then capitalized on that mortgage. And reverse mortgages work. Yeah, reverse mortgages work kind of two different ways. One, you can either take a lump sum, kind of win that funds. But there's another way that the reverse mortgages work, and it can almost be supplementing your income. So maybe you can take the lump sum, but then you can also get a lump every month. And every month that goes by, the amount that you owe basically goes up. The downside on the reverse mortgages, typically those interest rates are higher than the rates that we can get from a bank.
Right.
Yeah.
Yeah, because I'm thinking if you were say $200,000 on a loan, and you own the home for another 20 years, geez, by the time you pay that back, it might be another $100,000.
It could be more depending on what happens with the interest rates. I think the beauty of this product is a lot of seniors can't handle a mortgage payment on a $200,000 mortgage, nor could they even qualify. So like what we said with our previous guest, the home in many cases is the biggest asset, especially for, a retired person. Depending on, what your net worth is outside of your home, leveraging the home up can be a great way of either keeping people in the home or supplementing the income. So, I think it's a conversation that we're having more and more every day with seniors. And you're certainly not alone. We're having these conversations all the time.
Okay, Rafe, how's that sound? Good?
Thank you. Sounds good.
Okay, great. Take care. 902-405-6000. Terry, hello.
Hey, how are you doing?
Well, you?
Very well, thanks.
Great.
But Clinton, and you two are doing a grand job at your weekly shows and so on. It's a service needed. Thank you. So, Clinton, I'm doing some mentoring with a young real estate person.
Okay.
And he's just looking at a couple of ways to kind of get himself solidified or, able to move forward. Mm-hmm. One of the things he's thinking about right now is maybe looking for a fourplex.
Okay.
Live in one unit and then rent the others. And they could all possibly be rented when he buys it.
Yeah, I think that's a great idea, especially for first-time homebuyers and young people trying to get into the real estate market. I love it.
Great.
Yeah, I think that's a great option. Sorry, go ahead.
Any little red flags or that he should come talk to you, number one.
Yeah, well, I think getting pre-approved is key. And the way that it works when you're buying an owner-occupied rental, if you buy a single family or like a 2-unit, we can qualify for someone with as little as 5% down. When you buy a 3-unit or a 4-unit, and that 4-unit would be the max, it would be a minimum of 10% down. And of the rent in those other 3 units, we can use 50% of that to add to the gross income. So it can really help with qualifying sometimes. And as you know, with the purchase prices, people need every little bit they can get sometimes income wise just to get that mortgage approved. And we're seeing a lot of younger people choosing to buy maybe a single family with an in-law suite or a 3 or 4 unit. This is becoming more and more common, especially kind of as the prices have increased and as the interest rates have gone up too.
Cool. And so, this may sound like a silly question, but why should he come see you? Like, how can you help put things together?
Well, I think if you're talking about someone who's just entering into the real estate market, maybe this person is self-employed. I don't really know what their situation is. But I think the great thing dealing with an unbiased mortgage professional like us, and, there's so many out there, is we are really the pros at just doing a mortgage. We're not trying to sell people, a credit card and bank accounts and all this other stuff. And mortgage lending is very, very complex, and everybody's situation is different. Like, it's really made up of income and assets and credit. And sometimes people just need some advice. They need a plan. And I think that's where we really, really do excel. So many self-employed people, for example, have had a bad experience with their lender for whatever reason. And I think with us, where we have access to so many different lenders, we can always find, a solution for people, or at least make a plan so then they can, meet those goals. So.
Yeah, and you have a great rep. So
Thank
reputation,
you.
That is.
Thank
Great.
you.
Thanks a million.
Okay,
Thanks,
Terry. Take care.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.